Good morning, everybody. Welcome to this Thursday, the 29th of August. Hey, yesterday was a down day, a little bit of bounce. This morning, it looks like NVIDIA. We'll talk about that as they reported earnings yesterday after the close. As another big issue is another retailer reporting that we'll talk about when Dave joins us here in just a few minutes. Hey, before we do that, though, let's not forget that in this world we live in, there are so many things that are out of our control. But I want you to know you can take control of your investment portfolio by knowing the amount of risk that you have in that portfolio and making sure that it corresponds to the amount of risk you should have in your portfolio based on how close you are to retirement, your age, your other income. There's a lot of factors that go into that. That's why I developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And with that, we got Dave coming up next.
It's the danger zone. It's Kenny Loggins there talking about danger zones. Let's check out the stock market, shall we? Find out what your money's doing for you this morning. On the telephone, I got Phillip Statler from Statler Financial Services in downtown Sebring. I think NVIDIA kind of put us into the danger zone yesterday, didn't they, Phillip?
Hey, they did, Dave, I tell you. And they reported after the market closed, and we'll talk about that and more after we get through some of the economic news. But it was definitely, we'll talk about it in a minute.
Yeah, it was weird. It just reinforces my statement that watching investors is like a study in abnormal psychology. Yesterday ended up being not a great day in the process. Dow fell 159, Standard & Poor's down by 33.5, NASDAQ down by almost 200, down 199 points. And we start the morning out with the two really big numbers for Thursday. One of them was kind of a first-time jobless claims. They expected 232,000, got 231,000, a little bit down from last week. That probably won't move things much. But you and I were noodling things through on the instant tick futures, and the gross domestic product second quarter reading came in. They were expecting our economy to grow at a 2.8% annualized rate. We overachieved, up 3%. I would think that would probably have a big effect on the market, and at least what you were saying a couple of minutes ago, it didn't seem to really excite them all that much.
It did not. I mean, no big jumps or declines, but I will tell you this, Dave, that in the last 5 minutes or so, we are seeing the futures kind of fall off of their highs, right? We did see the Dow up to 305. Now it's a little less than 250 up. So same thing with the S&P 500 and the NASDAQ. We're seeing them start to fall off. And I think it's this, Dave. If we're growing at that pace, that's a little hotter than you would expect, given that you want inflation to come down. And so I would think that they would expect that the growth rate would be less than that, indicating that we are finally putting a hammer to inflation. And I think the growth rate really doesn't indicate that. And that's probably what's got them a little on edge.
That's kind of what was going through my mind, that we were kind of entering a good news means bad news situation from the standpoint of equities, because if the GDP is in a real nice, healthy state, that kind of decreases the chance of the Fed cutting by 0.5% come September, and might actually bring the equation back down to the point where some folks might even be thinking about holding steady.
Well, that's right. And we don't know what that conversation will look like in that room, but definitely, this will weigh on their choice.
Well, yeah, it does kind of say, hey, the job's done, the inflation's going down, we're surviving the 5.5% interest rate, so why do we need to do anything heavy right now? Things seem to be working all right, and we aren't killing the economy. And that, for the interest-sensitive stock investors, that's about the worst news they can ask for.
Yeah, it is. I will say, I just see a headline yesterday that said, the next thing the Fed's going to have to tackle is balancing, the job issue, right? We're seeing people lose their jobs. And is that too much? Have we gone too far and we got too many people on unemployment? Yeah, I think that will be something they talk about as well.
And again, decreasing unemployment first-time claims would tend to indicate that, yeah, maybe a little bit high, but it doesn't need to have exactly the accelerator turned on yet either.
No, it really doesn't. You're right.
So basically, we had good news on the report, which is not necessarily good news for investors at the short-term moment, although it's good news for the economy. We're not running it into the ditch by any measure yet anyway. Then we get to our dear friends from NVIDIA yesterday, and these guys are making 75 cents on the dollar. They got a profit margin I've got friends that would kill for. Their sales were up by 122% from last year. They beat all the street estimates, and investors were hacked off. This is a template for what you and I were talking about yesterday. They can't just beat the market. They got to cream the market, or their investors get mad at them, right?
Well, and here's the case, Dave. It's not so much what they need to have done, because they beat. They beat by 4 cents a share, came in at 68 cents. They were about $1.5 billion revenue ahead of expectations. Here's what's got the investors a little on edge is that
guidance.
Their growth rate is slowing down. Yeah, so, and their gross profit margin is not exactly where they thought it should be. It's a little less than what they thought it should be. They're, like you said, their growth rate is up. Their gross profit margin is expected to be by the, projected to be like in the mid 70%. Well, they thought it should be 76.4%, I think. And so, it doesn't take much to hack off some investors, but they're trading down today, 3 1/3% after falling yesterday. Don't hold me to it, but I think they were down about $3 yesterday as well.
Yeah, I know they dropped precipitously, and they're kind of slowly recovering right now after the folks who looked at them and sold them like chiclets now are finally sobering up and saying it really isn't all that bad a deal anyway. But it's one of those things, you and I were talking about it yesterday morning, that it's just one of those stocks that unless they completely kick booty, they get penalized, and that was one of those things. But I was reading that their profit margin is around 75%. I'm sitting there saying, "Oh my Lord in heaven, it's not my industry, but I know about 1,000 friends in my industry that would kill to have half that profit margin."
Yeah, exactly, and it's a case of it's not the earnings because they beat. I think that everybody would be happy with that. It's the projection of the next quarter earnings and the next quarter revenue, and not growing as fast as they think they should or they wanted them to.
The guidance said they were only going to be up another 10% this next quarter, and that disappointed people. Once again, they want the world with a fence around it. It is recovering a little bit this morning, and that's good news. One of the allied fields that kind of follows our friends at NVIDIA, Supermicro, they had a crappy day yesterday, too. They were off by 2%. They have an additional aggravation of the fact that one of the big short-selling research firms called them out for a bunch of bookkeeping issues. So they ended up falling because folks are selling Supermicro short this morning, which, once again, tech is becoming a real roller coaster to invest in, isn't it?
It is. It is definitely one of those things. Yeah, you got Supermicro falling 19%. That's a pretty big fall yesterday.
Yeah, they did not do well at all. Like I said, another 2% in post-market trading. Other tidbits that are out there at the moment, mortgage rates falling again. 30-year mortgage rate is down to a 16-month low. Berkshire Hathaway, here's an investment tip for him. They're now cutting back on their equity in the Bank of America. They're selling off the Bank of America stock sales. It's helping them. They're up past $1 trillion in market cap, which is the first for them.
That's a nice little jump, isn't it?
Oh, yeah, as somebody that bought Bank of America at 50 about 20 years ago and it never saw it again, I kind of sit back and go, you go, boy, I like Warren Buffett all of a sudden.
Hey, we've got a few more retailers that have reported, Dave.
Let's hear it.
One of our, pop up on every corner stores, Dollar General, reported, and they missed. Let's just put it bluntly. They missed on both fronts. They were short on earnings by 9 cents a share, came in at $1.70, short on revenue by about $0.1 billion. And so they not, and then of course their guidance was just crappy. And so the street is not happy with Dollar General. They are down 25.25% this morning.
Whoa.
Yeah.
Boy, they're going to have to build a few thousand more stores to make up that difference, aren't they?
Yeah, it's going to be their 52-week low was $101. Right now, if they were to open right this second, they would be at $92.56 a share.
Wowzers, that is a miss.
Yeah, definitely a big miss. Best Buy also reported, and they beat $1.34 versus $1.16. Revenue was just a little bit ahead of expectations, so that was good for them. They are trading there. Oh, they're getting a nice bump this morning, up 15.75%, Dave.
Cool. They've been kind of beat up at times a few quarters lately. I'm glad to see them recovering.
And the last one I have for you this morning is American Eagle, another retail operation. They did beat on earnings, miss on revenue. They beat by a penny a share at 39 cents. They missed on revenue, came in at 1.29 billion versus 1.31 that was expected. And so they're trading down about 7.5% this morning.
Boy, all these swings are much larger than we used to see when you had just a minor miss, 20%, 7% changes. We just aren't taking any prisoners during the earnings season this year either.
No, definitely not.
Absolutely not. Resetting the table, it was generally a down day, as much as 1.25% in the NASDAQ exchange yesterday. 45 minutes before we open this morning. What are we looking at, sir?
Dave, right now we have green ink. It's just not as green as it was earlier this morning. We've got the Dow up a little over 0.6%. That's $259. We've got the S&P 500 up a third. That's $19, and the Nasdaq 100 up almost 0.4 to up $70. So at least we got pretty much green ink. On the other side of the coin, let me see. My software is still doing the same issues. Let's see if okay, here's commodities. Commodities, we've got silver up about 0.5%, still below 30 though, at 29.78 an ounce, and we've got gold up less than 0.1%, and then crude oil is I think it's lower than where it was yesterday, but it's up 0.8, $75.16 a barrel.
Boy. Well, at least it's staying in the 70s. I'm starting to take small favors and happy with them. Kind of the usual rule of thumb, Asia follows our yesterday, and Europe follows our current futures track, and that's pretty much what happened. The Asian Rim market almost universally off yesterday. Almost all the indexes were off by more than 0.5% at the 6 a.m. close. Over in Europe, on the other hand, they're looking at our futures and say, oh, all right, these guys have their poop in a group over in America. Overall, European index is up by about 0.7%, halfway through their trading day over in the European community. Keeping tabs on retirement programs and plans, make sure you got a plan that you can count on happening. How do I find you to be able to get that plan in place for me, Phillip?
Then give us a call at 863-382-0037 to schedule their core retirement analysis, where we'll help them design the retirement they always dreamed of. And then catch us on our Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And us tomorrow morning together again on Light FM at the same time. We'll see you then, Phillip.
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope you find this informative and interesting, a little entertaining. Join us again tomorrow, same time, same place. Until then, have a great day. Bye.